Okay, guys. So 106 people. I mean, that's a good number. Even if there is only one person here, I would still go ahead and start the seminar. So let me go and share my screen, and we can start this. Okay. Okay. Okay, guys. So the thing is that when it comes to a lot of people trading now, they're struggling because of some reason. One of them is that they look at the structure of the market and they get confused. They don't know where to enter. They don't know where the price is going to, and sometimes they say, "Okay, price is going up now, right?" And then coming down, and there is a sweep, and they already missed this trade right here, and they don't know what to do next, right? So I'm really taking another approach today, and just to say that this is not my main approach. This is not my personal one. One of my friends shared this with me, and he has been using it for a long time. And I gotta give credit to the person who was who invented this, and his name on Twitter is this. So let me go here. This is his name on Twitter. This is the guy that created this style of trading. Not the style itself, but the thing that we're gonna talk about, and you're gonna know. So this is his name on Twitter. I'm just gonna give him some credit because he deserve it. Now, what is the you know what does it rely on, or what is this style of trading based on? Basically, at any start, like whenever a new week started, when does the new week or the new trading week starts? On Sunday, right? So every Sunday, we're gonna be looking at the price action on the 30-minute, and we're gonna have an area that we're gonna, it doesn't change every week. We're gonna have a fixed area for the whole week, and let's say that the zone is just like this. This zone right here, mostly we're gonna enter trades based on the zone on kill zones. So 2 to 5 landed kill zone and 7 to 10 landed kill zone. Now, there are different approaches to take a trade here. There are ones that beginners can use without any knowledge of the SMC or ICT concepts. No liquidity sweep, nothing. However, it's gonna give you a less win rate, right? And it's not gonna be as good as people who have really understanding of the market. That's something we can all agree on. Now, let me show you something that the the person who invented this, only by following a basic, entry for totally beginner. So if I ask you now, how easy it is to, like, let's say this is a fair value gap or an order block, basically a zone, right? A fixed zone. How easy is it to enter from this zone right here? If price, all I'm just saying is that if price is coming lower, and then we have price coming here into this zone right here, and then we have a candle that got a rejection, so just something like this, right? Candle that got rejected from the fair value gap and then closed above, and we enter here. How easy is this? It's very easy, right? Now, this is the beginner's approach. So anyone here that has been struggling, or not even learning ICT or SMT yet, he did not put the time or the effort yet, and or he just got introduced to this style of trading, then maybe you can try this. Now, even this itself, just by doing this, when you have a rejection from this zone, and we have a candle that closed out of the zone, you enter here, you have a stop loss, and we're going to discuss this. You have a stop loss at a specific level, and then you target a specific level. What is the win rate of this based on the guy that invented this? And that was a forward testing, not even back testing. So if I go here, show you something very quick, those are the results that he was getting. So you see, those are his results. I'm just giving credit for him for everything, and then I'm gonna put my own touch and my own way into this. So you see how January had -7 hour, and this is the easiest thing ever. Like, you enter, this was January was the only month where he was in a drawdown and actually. So and then February 2020 22R, 15R, 11R, and you see the total PNL is 98R, and this was Euro USD. So we're gonna take this mainly on Euro USD, okay? Now coming back here, we're gonna take different approaches here. Now, first of all, what is this zone? That's something we gotta agree on, and we can, you know, we should make it clear here. So whenever a new week starts, and we have, price, for example, the week here Sunday, the new week starts, the new daily candle start, price going up, and there is no fair value gap at all. Okay, we don't have any fair value gap. Now, at some point, let me use this instead. Price is going up, no fair value gap, just price, going inside of each other, and then somehow there was a fair value gap here, and this was the first fair value gap on the week. On what time frame? On the 30-minute time frame. So this is a fair value gap on the 30-minute time frame, and it's the first presented fair value gap in the week. It's the same as, it's not the same, but the new week opening gap, for example, is the gap when the new week started. Instead, we're taking it into another, we're taking another approach, and it's the fair value gap in this case. So we have a fair value gap here. This is the first fair value gap on the week. Okay, so when Sunday start, maybe it's gonna take time. Maybe there is no fair value gap on Sunday. It's gonna happen on Monday. It doesn't really matter. It just should be that it's the first fair value gap in the week. This fair value gap right here would be respected a lot of times. Now, as we know, fair value gaps get respected once, twice, and then it gets weaker. So at the beginning of the week, when it's not tested yet, it's the best time to enter those trades. Now, what are some of the entry approaches here? How can we enter? One of the entry types is when price comes to when price comes back to this
William,
fair
sorry to
value gap.
interrupt you. One guy in general chat is written that he's in the room with others, but he cannot tell if it has started. In the general chat,
What do you
Munir.
mean?
Like, did you start the event,
Oh yeah, I did.
or you just joined quietly like that? Because you see, like Munir wrote that. Guys, please write in the chat
I'm in
if you
the
can
room with
see the
others.
screen and hear us. I can hear just fine. Everything's fine.
I
Okay, perfect. Munir, it's a issue.
so if
Yes,
you
please. Yeah.
so just tell them that you click on join, and then I don't know, but I know everyone can hear.
Okay.
Okay. Okay, so yeah, let's continue. Now, this fair value gap right here, as we said, it's the first fair value gap of the week. How do we enter from this? Now, there are different approaches. The first one is you take the simply approach. This simply approach is basically when we have a candle that closed above, and let me put it on another color here, just like this, a candle that closed above, for example, and then it has a rejection. And I really prefer candles like this, just with a wick. Not a big wick, not very big one that, the stop loss is huge, but just a candle like this where you have a rejection, nice rejection, and then it closed above. This is a bullish fair value gap. Then my entry is going to be at the closure of the candle right here. Now, we're always going to take a fixed reward to risk for this one because I want to simplify everything to you. A 10 pip stop loss is good for EU. So for EU, we're going to take a 10 pip stop loss. So there you go. For example, 10 pips. For in this, because we're drawing here, it's different. Usually it's going to be lower than this point. 10 pips stop loss, and then take profit 30 pips, which means that we're always taking a 3-1. We want to have the probability in our side. So it's always going to be a 3-1 trade, and price can actually come lower, and then you lose. That's okay. And sometimes it goes to take profit, and you get 3R. So, even 40% win rate, 50% win rate, 35% win rate is good with 3-1. Right? And we can all agree on this. Now, this
I
is
would
one of
like
the
to
entries.
clarify
And
one thing to the people who are here. Just one thing to add up to this strategy is, guys, win rate. There is no strategy which will give you 100% win rate. 40 to 50% win rate with 1 is to 3 RR is a great win rate. If you calculate it properly, it is a great thing. Okay, please don't be like 40 to 50% win rate with 3 RR. Why is the win rate low and all of that? Why did I lose? If you have a 50% win rate, you will lose 50% of the times too. But when you're winning, it will be 3 times bigger than your loss. So there is no strategy that will give you 100% win rate, of course, but this will give you a good win rate, good risk to reward ratio. So at the end of the year, you will be in good profit. Okay, thank you.
There is nothing such as 100% win rate, because it's if you're trying to get to that level, you'll be chasing that number for your whole life, and you're not gonna be trading. So I don't advise you to do that. Be satisfied with 50, 60, 40%. If you have the good, if the gain on the account is good for you at the end of the month, then that's all you need, right? Because you can have one 10-hour trade out of 5 trades, and you have 20% win rate, and you can still be profitable if you could manage that. I'm not saying this is the way, but if you could manage that and you could manage your risk and your psychology, there's nothing stopping you, right? And you're on the right track. Now, this is the first approach, and it's the easiest one, and this is what the person who invented this is doing. He's basically taking any rejection from the fair value gap and going long or short. Now, even if this is, I'll say, a bullish fair value gap, right? If price went lower, just like this, did not respect it, and then started to go up, and then right here it comes here, and then there is a rejection, we can still take a short position, even though mainly this is a bullish fair value gap. But we're gonna take both sides, okay? Because now it's becoming an inverse fair value gap. It's the same as what we discussed before. Now this is the main, or this is the first entry type. What is the second one? I mean, you can get a lot of entries, but the second one, I'll just keep it simple. Is basically if we have a liquidity inside of this. So let's consider this as our liquidity level, this low, for example. Okay, this is liquidity inside of this range, and then price came down in kill zones, sweep the liquidity just like this, and started to go up with a fair value gap. We can actually enter now from this fair value gap. So it's the same thing. You remember when we have a fair value gap on the 15 minutes and people are looking for a confirmation entry? It's literally the same thing, right? So even if you have a strategy already and you want to put it in and use this as a confluence, and you can just use this, something additional, just have this fair value gap in your chart. Maybe if price comes back to this fair value gap, you can have a trade using your or current model. So there is no problem with that at all. Okay. Now, mainly on this session, we'll try to focus on those, and I'm just showing you how I'm gonna go step by step how to do this, and I'm gonna show you how price respect this level. Okay, and yeah, so we're just gonna keep it simple. This is something that you can be creative with. This is a zone, and you can do whatever you want inside of this zone. Just make sure that, okay, if price sweeps to the downside, then you're looking for a long position, and the opposite is also true. So let me remove this, and let's go to the. So now we're on the 30 minutes, right? I'm gonna reset the chart, and where is the start of the week? So we have Friday here. Now we go to Sunday. Sunday started here. So I'm gonna zoom in here. I'm gonna zoom in, and I believe that Sunday is right here, and we have a very small fair value gap, right? So if we zoom in here, I'll go full screen. Maybe it's better. Okay, you see how Friday is right here, Sunday is right here, and we have a very small fair value gap. That's the one. That's the one. So if I go and mark this fair value gap, I'll just zoom in more and mark this fair value gap just like this. Or what we can do also is this. So I'm gonna go give my line right here, add this, give it another color, say uh, say this color, and then make it more thick. Okay, and then I'll grab another one right here. So that's our area. Now, whenever price, comes to this area, there is a rejection from this area. I'm gonna be interested in buying or selling. And let's take a look at the price action here. So on the first, so you see how price is going up, right? Came lower. What do we see here? In that was, yeah. So this is on agent. So the blue one is the agent session, the yellow one is the lender session, and the red one is the New York. Okay. Now price comes in Asia. Usually we don't take trades on Asia, and this one closed below it. So not really interested at this point. Now this one closed above it. Maybe yes, you can enter here with a 10 pip stop loss, but I don't trade on Asian session. I'm just showing you that okay, even here it worked. Why? Because this was a winning trade. But right here, I'm not sure if this is a winning trade, but usually I don't want to see a wick as big as as big as this. This is a very big wick, and it's gonna give you a huge stop loss. So we are entering with 10 pip stop loss, right? Usually something that I do, if my entry is right here, I check, is this until this low, is it at least 10 pip stop loss? If it is, then I enter the trade. If it's not, then I said, okay, this is already a big retracement, I'm not entering. So let's test on this long position here, right? When this candle closes just like this, we enter. Now, is this a 10 pip stop loss? Here is the low. 10 pip stop loss is right here. Yes. So this is a valid trade. This is a valid trade. You see how we just see the rejection from the first 30-minute fair value gap, and that's it. Now we can also, if you click on this, on the position, you can go to the left, and the templates, you can actually add a 3-to-1. So the only thing that you're doing is clicking twice on the position, come in here, and just put it 3-to-1 here, like just adjust this, put it 3-to-1, and then click on the template and save drawing template as, and just put it 3-to-1. So this is actually a winning trade. You see, 3-to-1 achieved. That's a 3-to-1. That's a 3% gain on your account if you're risking 1%. Now we go to the left and let's see what happens. This is our zone right here. You see how the first one is the best one? The first touch in kill zone is the best one. Now we're gonna move to the left, and you see how here it was not respected at all. So we don't have an entry here. We don't have a trade. Now we move to the left. Now we know that most likely it's gonna be holding to the downside, especially that what I can see here is this. There is also a fair value gap inside of this opening fair value gap. So you can actually use this as a confluence that okay, price might react from here. There might be a rejection from here. And we go to the left. Let's see what happens. Price actually doesn't come. Okay, it only comes slightly inside of the fair value gap, not deep inside, and goes lower. So there was no entry. We go to the left. What do we see here? Actually, it's happening now. Okay, it's happening now. So it was, if so, 2 to 5 is the kill zone. If you have a trade at 130, for example, or I would say 130, slightly before the London kill zone, I'll still take it. If it's 630, for example, I would still take it. Now, this trade right here was on the Asian kill zone. If you are someone who trades Asian kill zone, then yes, maybe you can enter from here, and I believe it's going to be a winning trade already, right? So where's your entry at? When you see there's a rejection from the fair value gap, you see how it's really working? Like you see how price is respecting this fair value gap, not closing above. Now your entry is gonna be here. Then click on this, just give it a 3-to-1, 10 pip stop loss, and so there is still no price in profit, but we are still not into the 3 art profit, right? Now another entry would be right here. You see how there is price, slightly close above, so I'm not really entering here, but then price weeks above, come down and close below. I don't like this much, but it also can be as an entry. Why? Because price closed out of the fair value gap and there is a rejection already. So your entry can be right here at the low, right? I mean, at the closure of the candle, 10 pips stop loss, and a 3R, and price is also going to the take profit, right? So now you are already at 2.39. 2.39. Now you can also go to a lower time frame. So I'm not sure if there is an entry here, but we can go check. So 5 minutes time frame, and we're gonna see what happens here. You see how on the 5 minute there is a clear rejection from the agent session. You see how price doesn't close above it, come lower, and then on the lender kill zone, slightly before we have the sweep, price only stayed up for one candle and then started to go lower. Did we have a fair value gap to enter from? There is a very small fair value gap right here, and that's where price come back to. Usually, I'm not gonna be that positive when it comes to this fair value gap, but price actually comes back to this fair value gap and goes lower, and from there, that's your lower time frame entry. Now, another thing is if you go to the 1 minute, I don't want to go back to the 1 minute, but usually there is a sweep and there might be a change of character at this point, and price coming back into a fair value gap and a breaker. So even on the 1 minute, you can find an entry. Now we go back to the 30 minutes, and this is the way how to mark the fair value gaps. Now, what I want to so you see how prices going to the profit, even for the agent session, you're also at yeah, like 238, 2.38. Now there is an indicator that I might be sharing later that it marks the 30-minute fair value gap for you. So if I turn on that one, you see how for the previous week, I know that the screen is kind of, maybe for the live stream, it's kind of slow. So I really apologize about this. Now, we have this fair value, this week right here. This is Sunday. So Friday is right here. And then Sunday is right here. So this is the start of the Sunday. You see, no fair value gap, no fair value gap. And then this is the first fair value gap. So we're really marking this. You see how price first, if we zoom in here, you see how price first respect this, comes back into the fair value gap, goes lower. And then on the lender kill zone, there is this rejection. However, this one is, price did not close below. So price did not close below. I'm not sure if you still enter from here, if it's going to be a losing or winning trade. I believe it's going to be a losing trade. Yes, so it's a losing trade by a wick, and the price goes to the excuse me, and then price goes to the take profit. So there was no entry here. Now price comes back into the range. There is no entry here. There is another. So you should be okay. Like I'm only taking 2 trades per session. You should have your own rules, because sometimes price goes inside of the range and it just stay. There's a lot of inside candles. There is no momentum. So usually, yeah. So yeah, after this, I mean, this is the end of the lender kill zone already. So I'm not really entering here, right? And then price maybe at this candle, but I believe it's the entry was at the end of the lender kill zone. So not really interested. Now New York kill zone started here, and you see how we have this candle closing below. Closing below. This is not my main entry, but it can be an entry when price goes from one side to another, and then there is kind of a rejection from here going lower. That's an entry. So you can actually enter from here, target 3 to 1, and this is clearly a winning trade, right? Then on Asia is too low. London is low also. Now this is 530, so we're not entering here. And then you see right here, what happened? Price goes to the fair value gap. Big rejection at 9 a.m. So we are in the New York kill zone, right? So how do we enter? From here, 10 pips stop loss and 30 pips take profit, and then we can see that it's a winning trade. No, don't worry about this. Why? Because we are actually entering. So when this candle closes, we're entering right here, and it's going to be the next candle. So it's basically going to be like this, right? So the stop loss is right here. You see how price comes only here and goes lower, and this is a 3-1. 3% gain on the account. Now, a lot of time it goes much lower, right? But 3-1, um, the creator himself said that 3-1 is the good number. And based also on my backtesting, I backtested different uh, reward to risk ratios, and I saw that 3-1 is the best one. Now there is a trick with FX replay that instead of I've done it with Excel. Instead of when I export the data, instead of start backtesting again with another reward to risk and see which one work better with you, I have a way that okay we can do that immediately. Like we can test 3R, 4R, 5R, and we can see what's the gain on the account, what's the win rate. Maybe I'll do, if you guys want to, let me know. We'll do a session about this, okay? Now, this is all what we're talking about. You see right here, price just start to go lower, doesn't come back to the fair value gap. And at the end of the week, that's it. We have a new opening fair value gap. So I'm just going to go 1 week to the past or 2 weeks, and we're going to see how it goes, right? So this week, there is, you see, there's no trade here. Maybe this trade. This is the only one. Why? Because price did displaces above. Now, right here, price did not close below the fair value gap. You see? So there was no closure below the fair value gap. This one is inside candle. And this one, you might get an entry here. And I'm not sure if there is a take profit. So let's test, right? Entry here. 3-1. Yes. Yes. So there is take profit. Price hits. I mean, I'm not sure. Does it take hit profit or stop loss at the beginning? I'm not sure. But mostly I take profit. Right? Mostly I take profit in this case. Because in the same candle, price goes low and up. Now this is the first entry. Second entry is gonna be right
It
here.
was a take profit
Yes.
because that day I also traded, so I remember it was a take profit.
Oh, okay. Okay. So this
Price
is
went
take
up
profit.
first.
No. Yeah. Now the same thing here. We have this candle that goes at the low, right? But you were already in that trade, so you're not gonna take this one. Maybe when price comes here, maybe you enter here, but it's also gonna be a losing trade. Now we are out of the kill zone. Now if we go back, let's see how price respects this fair value gap right here. So you see the respect of this. This is the New York kill. The New York kill zone, and you see how this is the only candle that got rejection and closed out of the kill zone, right? So if we enter here, 3-1. Okay, this is actually, so this was it was a losing trade. This one was a losing trade, even though, but this is, we talked about the rule, right? If the high is more than 10 pip stop loss, if we cannot cover the high with the 10 pip stop loss, we're mostly not taking the trade, right? So this is not a trade for me. This is because the entry is gonna be right here, stop loss is all the way right here, but we're not covering the uh, stop loss. But if we were able to cover it, then this is a winning trade, right? Even if I go 3-1 here. So even if I go 3-1, you see how price went lower. Now this one, let's check this one out. Right? So this one, we got an entry here, and this one is also the same. So yeah, so this one I'm still not entering, even though it was a winning trade. But usually I don't like if the you can play with lower time frames here. You can still play with lower time frames, and even for this one, you're gonna have a lower time frame. Now, if you were able to like extend it, like instead of 10 pips, go like 15, and you can secure and then go 3-1. That's also another option, right? It's like you don't need to stick with um, 10 pips stop loss. Like you can be flexible with that. Now, what do we see here? Right here, there is a losing trade right here. This is a losing trade, I believe. Then we go to the left. Price was too close to the fair value gap. And okay, this week, so maybe a losing trade here too. Yes. But if you're someone, yeah, so this is a losing trade right here. Let's go to the last week. We're just gonna cover the last week. Just going over price action, not much. Okay, I really want you to guys,
Matlab, the
if
next
anyone
trade after
already
that, take
have,
your profit. Just the next trade where you showed the losing trade.
which one? Let me see.
Just the recent one where you showed the losing trade. Go there. The
This
next.
one?
Yeah, yeah, yeah.
Yeah. Okay. Yeah, I believe so. But what I'm saying is that, okay, guys, if you already have a setup, then just implement this, right? Just use it as a confluence. You don't need. I don't want. I'm not here. Even when I post strategies on YouTube, I don't mean to distract you, but I mean there are a lot of people who are new and coming to my channel and they want to learn something, right? So that's what I'm doing. I don't mean to distract everyone, and you should not have anyone distracting you. Me, other people, no. You should be, stable. You should be focusing on your setup. No one should have, any impact on you and your trading style. So that's the thing. That's all what we're doing here. You can, even inside of those fair value gaps, you can have your own setup, and you're gonna see how it works. It works nice, but you just need to stick with it, right? Stick, make it better, and see how it goes. What I explained today is the simplest form ever, but you can always improve it. You can always make it better, and that's it. That's it. You can whatever 2022 mentorship model, inverse fair value gap, all of the lower. And I mean, if you go from higher time frame to a lower time frame, and you have a point of interest in the higher time frame, you can literally take any entry type in the lower time frame, any entry type. So yeah. Now I'm not sure. I'll see if I can share the indicator, but it's so easy because for a week you need only to spend like 1 minute, right? Or 30 seconds just to draw the first fair value gap, and that's it. You don't need anything else after. Okay, so I do believe I explained this in a very clear way. We're gonna take, 5 to 10 questions maximum now, just to if people have a question, and they should be interactive questions. So I'm gonna take question from people. Like if anyone wants to talk, request, and we're gonna accept it. You give your question. I'm gonna answer it, and we're gonna see how hopefully even from your question people can learn. Okay, so
Let me add one by
I
one.
just believe that. Yeah, go ahead.
So I've invited Firoz. Firoz, we will wait around 30 seconds for you. Then I will go to the next one. I guess Firoz is busy. So I'm going for the next guy, Boundless Lord. I've invited you to speak, Boundless Lord. You can join.